Hi everyone, in this video we're going to talk about FHA versus conventional loans. You're going to learn which is going to be the best loan for you, which loan might save you the most amount of money possible, and then a strategy that I use with a lot of my clients to help make sure they get the down payment they want and the rate they want up front, so ultimately they have the best long-term savings over the life of the loan. So let's take a look at this. When you're shopping for a mortgage, you're going to run into a lot of different options with home loans. One of the biggest options that people face is, are they going to go with an FHA loan or are they going to go with a conventional loan? Now, there are a couple of different nuances here that will help you make a better decision on which one is right for you. So let's take a look here at FHA versus conventional. So right off the bat, FHA loans normally require a minimum of a 580 credit score. FHA loans are better for people with lower to middle credit scores, whereas when you have a higher credit score, conventional is usually going to be the best loan for you. And what I mean by the best loan is, what loan is going to give you the most savings over time? For example, if you take a conventional loan but you have a lower credit score, then you're going to have a lot higher interest rate on a conventional loan than you would on an FHA loan, because FHA loans are suited more towards someone with a lower to mid credit score. Whereas conventional loans normally require at least a 680 credit score, where you'll start to see a lot better interest rate. Also on the FHA side, you have a 3.5% minimum down payment. So if it's a $100,000 loan, you'd have to put down $3,500 on that property. On conventional loans, sometimes you can get a 3% down loan. Sometimes there are income limits, or you have to be a first-time home buyer. But most of the time, the down payment will actually have to be about 5%. So if 5% down is too much for you, you can move over to the FHA loan to get that 3.5% down and save you some money at closing. Now also, FHA is going to be more accommodating for people with bankruptcies, sheriff sales, or any negative credit event. FHA loans have a shorter time period where you have to wait to clear those negative events, whereas a conventional loan is going to require you to wait much longer, sometimes 3 or 4 times the amount of time for your credit to do what's called seasoning before you can get a loan like that. So if you have a negative credit event, it might be worth exploring FHA options first and then refinancing into a conventional loan later on. Also, FHA loans are only for primary residence. So if you're getting an FHA loan, it can't be for an investment property. You have to reside in that property to get an FHA loan. Now, for a conventional loan, it can be an investment property, a primary residence, or a second home. Those occupancy options are much more flexible for the conventional side. FHA is also more accommodating if you have a lot of debt. So if you have a high monthly debt obligation, FHA might be a better option for you. Usually you can get the debt to income ratio on an FHA loan to go 55%, whereas a conventional loan, it's going to top out around 49%, sometimes even lower depending on your credit score. FHA will allow you to ask for up to 6% of the purchase price in seller credits. So the money that you're getting as a credit from the seller can be used to down pay your closing costs. On the conventional side, normally it's 3% depending on how much money you put down, though this can change and go all the way up to 9%. So talk with your mortgage advisor on what options you have with seller credits. I've never seen anyone ask for more than 6% seller concessions, just because normally you don't need that much. Also, FHA mortgage insurance is a lot more expensive than on the conventional side. So for FHA, you have 2 types of mortgage insurance that are going to be on every loan. So you're going to be charged for upfront mortgage insurance that's normally wrapped into the loan, and it's about 1.75% of the loan. So if you're taking a $100,000 loan, you're going to be charged an extra $1,750 that will be added to your loan, and that money goes to FHA. Not only that, you pay monthly mortgage insurance. On the conventional side, you pay no upfront mortgage insurance, but you do pay monthly mortgage insurance if you have equity below 20%. So if on a conventional loan you only put 5% down, you're going to have to wait until you have about 20% equity in the property for your mortgage insurance to fall off. On the FHA side, that mortgage insurance is going to stay with you for the life of the loan unless you put more money down, usually about 10% before the mortgage insurance is going to fall off, or about 10 years into the loan. So the bottom line is the main difference between these loans: FHA loans are a lot easier to qualify for. They allow you to have more debt, lower credit scores, and they are going to be more lenient on helping you qualify. Conventional loans, though, are going to help you save more money over the long term, but you have to be well qualified with good credit. So the issue that people run into is they see how conventional loans are usually better for them, but maybe they don't qualify for a conventional loan, or in their circumstance, conventional loan might not be right for them or more expensive. For instance, sometimes when I talk to people who have a lower credit score and we compare FHA versus conventional, the conventional loan is actually more expensive over a long period of time because you're getting charged an incredibly high interest rate because of your low credit score. So you can think of an FHA loan as a stepping stone to get you into a conventional loan. So for right now, if an FHA loan is the best option for you, or it's the only one you qualify for, what you can do is talk to your mortgage advisor and say, what do we need to fix to make sure that we can refinance into a conventional loan in the future? Remember, when you get a loan, you don't have to stay in it for 15 years or 30 years or however long the term is. You can refinance when rates change or if your personal circumstances change. So if your credit score right now is a little on the low end and you get into an FHA loan that's going to help you secure the property, build some equity, you stop throwing your money away in rent and get some appreciation in the property. And then as you're working to build your credit score, maybe in a couple of years, you refinance into a conventional loan, and then you save on mortgage insurance and the interest rate and the overall cost of the loan. Okay, so hopefully this helps clear up some of the questions and get you a better understanding of FHA versus conventional loans. Keep in mind, you don't have to have these loans over the entire term. You can always refinance and get into a better loan if circumstances change. So if you'd like more tips and strategies for buying your first home, please like, share, and subscribe to my channel. Thanks for watching.